Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video I will be teaching you a new SMC entry model which has been kept a secret by SMC traders because this is the highest probability SMC setup because it rarely ever fails. You can see these are some recent student results with them using this kind of setup, all winning, as you can see here, here and here. Speaking of the students, before we get into today's video, I want to do a quick update from the last video on the ALQ private strategy results. We are now up 28% gain for just October. As you guys can see, all of the results are documented here and they are documented in the mentorship. And yeah, this ALQ strategy is only taught inside of the mentorship because I don't want this to go to the mainstream. Everything is taught in there. You'll understand exactly how this strategy works. And yeah, if you want to get into the mentorship and learn the ALQ strategy, gain access to signals given out by me, and you want to get access to all of the benefits over here, make sure you click the first link in the description to get 20% off because I am currently running a discount of 20% on the mentorship. So do get this before it runs out. But yeah, without further ado, let's get right into today's video. Alright everyone, without wasting any time whatsoever, I'm going to show you this entry model right off the bat. So this entry model is based off of course, supply and demand, as this is the number one thing that we have when it comes to SMC setups. However, I am going to teach you how to get a high probability supply and demand zone. And I'm going to explain why this entry technique is perfect because we have all of the SMC techniques stacked together to make a high probability zone. We're going to be using liquidity sweeps, order flow, Fibonacci, trade ranges, inducement, liquidity to be grabbed. We're going to be using all of these concepts in one to make the ultimate trade setup and entry model. So let's go over the first thing. So in this diagram over here, I have a demand zone. So the demand zone is in gray. And let's just say we found this demand zone. I'm going to be showing you all of the things that you can possibly find to make this the secret SMC trade model, which is practically perfect. The first thing you need to do is find a liquidity sweep which happened before the creation of the demand zone. So let me explain that. As we can see right here, price to the left hand side, so this is the demand zone. To the left hand side, we can see it gathered liquidity. We can see a level of equal lows which was gathered over here. Then price made these level of equal lows, went away from them, then came back, swept them, and then moved in the opposite direction. This is a textbook liquidity sweep, and this is what we need to look for in order for it to be a confluence for our trade. And that is price will sweep equal lows, move in the opposite direction, and start to move upwards, which tells us that, smart money is getting involved and it's looking to push price higher. So this is the first technique that we can use to understand that smart money is getting involved, and this is going to become a high probability setup. So look to the left of your zone. Once you've identified your zone, look to the left of it and see if you can spot a liquidity sweep which happened as recently. So the next thing we look out for is order flow. This is when, for example, if we just delete everything on the screen right now, let's say before this little liquidity sweep, we had another demand zone or a fair value gap, right? And if I make this box over here for this demand zone and this fair value gap, we can see the trading range or the low, the most recent low where the order block is made. We can see price reacted from a demand zone. So this gives us extra support towards the upside, as we know we have a bullish order flow in place telling me that price and smart money is pushing price towards the upside with very great intent, right? We can see here again that where this low is, price potentially made a demand zone right over here, and we can see price tapped into that demand zone. So again, whenever you see this blue dot on my charts, that tells you that this is previous bullish order flow creating a better sentiment for this trade and telling me that this trade is becoming a higher probability setup because we have bullish order flow. Again, the reason for that is because we can tell that price is being pushed heavily towards the upside by smart money. The next thing we look for is a Fibonacci / trade range. What I mean by that is we take the low of our trading range and we take the high of our trading range, you guys can find the low and high of your trading range after you have seen a break of structure. So when you have seen a break of structure in your desired direction, so because we have a demand zone and we buy from a demand zone or a buy order block, we would look for a break of structure towards the upside to show strength that price is pushing up. So when we have this break of structure towards the upside, we look for our Fibonacci from the low all the way up to the high. So from this low, the most recent low, from our demand zone, and we look at the high that is made after price starts to come down towards the demand zone, we get our Fibonacci. First of all, we are looking for a zone, for our zone to be below the 0.5. If your zone is not below the 0.5 level, then the trade is not going to be a high probability trade, or is just going to be less likely to be a good trade. You want the zone that you're trying to trade from to be below this 0.5 mark, and it will be even better if it lines up with the 0.7, the 0.75, or the 0.8, right? The closer it is to these discounted levels, these golden zones, if you want to call them that, that is even better. So make sure your zone is positioned in that way inside of the trading range, and you can check that out by using the Fibonacci. So that is the third thing. The next thing we look for is inducement. What do I mean by inducement? So we come back to the zone again over here. We look directly above it. When you are on your chart, I want you to do this exact same thing. Look at your zone and then look directly above it in price. Do we have another demand zone or another level of liquidity there, which is going to be swept as we move down into this demand zone? Why is this important? Because if we have, say, another demand zone over here, right, or a support level or another just trading level, which we know price is going to be trading at this level right above our demand zone, you may be even close to the 0.5 level, we know this acts as a level of inducement, because this is going to induce traders to enter in early in these positions, right? All of the buy positions that they will be entering early here, for smart money to then liquidate these traders, take them out of the market, and then go to their order block, their demand zone, whatever you want to call it, and that is where the real push up will happen from. So that is why it is super important to make sure that you are not the inducement, or you're not about to get induced, by making sure you do all of the things that I just mentioned, and by checking whether you're trading below the 0.5 mark. And last things last, very similar to the inducement is liquidity to be grabbed. Again, look directly above the demand zone that you are trying to trade, the zone that you're trying to trade, and look to see if there is liquidity to be grabbed. So if we have a double low or a triple low, or like two demand zones right in the same area, or 3 wicks meeting up, or any form of liquidity which you can find above your zone, this is going to add confluence to the trade, because again, smart money is going to liquidate all of the traders trading that level and then tap into this zone, and it will have the fuel and the liquidity to move up for our overall for smart money's overall push towards the upside, as we have seen previously, again linking back to that order flow. So as you guys can see, all of these smart money techniques come hand in hand, and I have now given you the blueprint on how to do that. We're going to move on to the next slide, which is going to teach you how to put this smart money zone into practice, because that is what I've decided to call the zone. The perfect zone, the perfect entry is called the smart money zone. I'm going to teach you how to put the smart money zone into practice, right? The first thing we do is understand our higher time frame bias. Very, very simply, I want you to go onto the higher time frame. So in this case, let's just say this was the 4 hour on this diagram, right? We go onto the 4 hour here. We can see that we made equal lows back here, and very recently price swept these equal lows on the 4 hour time frame, and we can see we are starting to reverse towards the upside. So this is going to be my high time frame bias, right? Which is that on the lower time frame I will be bullish, because price on the 4 hour is starting to reverse towards the upside because of a recent liquidity sweep of equal lows. Hence why I have this dotted path and arrow towards the upside, because this is the indication for me that we are moving towards the what? Towards the upside. Step 2 is lower time frame confirmation. Before we get into any zones, any analysis, any smart money zones, whatever it is, first of all, make sure you have your lower time frame break of structure in your desired direction, otherwise known as a change of character, or maybe sometimes you've seen me call it a shift in structure. We basically want to see on the lower time frame, so let's just say we move on to the 10-minute now. We want to see on the 10-minute a confirmation of this previous higher time frame bias in the form of a break of structure towards the upside. So if our high time frame bias from here was a bullish bias, then we want to see on the 10-minute time frame a bullish break of structure. So a break of structure towards the upside, meaning a previous high has been run through. And this is going to indicate to us that our bias is all correct on all of the time frames. So yeah, you can see this in a form of a break of structure, or if a supply zone fails and we move in the opposite direction, which means we are now bullish. So that is the second step. And the third step is everything that we just talked about in the previous slide, which is the entry. So making sure everything is perfect for the smart money zone, making sure we have the sweep, the break structure, the inducement, the Fibonacci, all of that stuff from this slide. You apply it onto the third step, and then you just manage the trade. Whatever you do, stop loss to break even, TPs, take partials, all of that stuff I will leave to you, or you can watch all of my other videos where I talk about that stuff. Let's now move on to the real life charts where we will do this in practice, and I will do a top-down analysis breakdown of a beautiful trade of I think around 5 RRs on GBP USD. So yeah, let's get onto that now, and so you can see the beauty of the smart money zone in practice. Alright everyone, so here I am on GBP USD. The first thing we're going to do is talk about that higher time frame bias, because overall that is step 1, and that is where the first step of this process comes, which is the higher time frame bias. So we start off with the daily time frame, which is that I saw that we had swept this previous day low right over here, right? Let me just put that in this so it's a bit slimmer. So yeah, we can see we had a previous day low over here, price swept that, and it started to move towards the upside. That is a very, very simple higher time frame bias. So I want to confirm this on the 4-hour time frame. I went down to the 4-hour. I saw we swept a level of liquidity here, which is that previous day low. I also see towards the left hand side, we we came into what looked like a previous level of demand over here, perhaps, right? Just came into this level, and we also swept some levels of liquidity over here, this previous weekly low over here, and some lower time frame levels of liquidity here. You guys can see all over here. So essentially, I was looking for a reversal trade, right? And of course, after confirming my bias, after seeing my bias on the higher time frame was that we could be short-term bullish for a reversal trade, I went down to the 15-minute to try and see if I could see any sort of setups. And on the 15-minute, I couldn't see any setups. What I had seen was that we had taken out this, sort of supply zone over here. But realistically, I went down to the 3-minute time frame to see what was going on over here. So I am on the 3-minute time frame now, and this is where the majority of my trading now began. So first things first, on the 3-minute time frame, what can I see here? First of all, I'm going to put a blue dot all the way back here, because that is where my higher time frame bias is coming from. It's coming from that higher time frame level of demand, which we marked up on the 4-hour time frame, and it's coming from the fact that we swept the liquidity, we probably tapped into a fair value gap here on the daily, and all of that good stuff. So first of all, we have our order flow, which is that on the higher time frame, we have tapped into significant areas of demand, fair value gap, and we've swept liquidity. So I can already put in my blue dot telling me that we have some bullish order flow. I'm going to make a note of all of the things that I find along the side here. So first thing I found was order flow. Second thing we are going to look for is we're actually going to look for our change of character, because we haven't even done that yet. So my change of character happened right over here, and that is because previously we can see we are in a downtrend. Price is making those lower lows and the lower highs, right? Let me just do this, do that, right? And the point where we have that last high is around here, or you could say over here, but I will go for here because this is the last high which caused a break of structure towards the downside. So I can see this previous high over here, and what happened to this previous high? It got taken out by this move towards the upside, right? So where's my change of character? My change of character comes right over there. And what can I mark this up as? As my change of character, shift in structure, whatever you want to call it, right? So I have now got my change of character. So what I can do now is I can continue with finding the smart money zone. First things first is let's mark up our actual demand zone for this trade. And that is this little 3-minute demand zone right over there. As you can see, everything is fine with it. 3-minute down candle followed by a 3-minute bullish engulfing candle. It is not mitigated and there are no wicks back into the zone. So this is a perfectly valid order block. So we have already established that we have the order flow here. The next thing we need to look out for is all of the other things that I mentioned in the slide. The next thing we will look out for is a liquidity sweep. So again, we look at the zone, we look to the left of it. Has it swept a level of liquidity? Yes, it has. It has actually swept multiple levels of liquidity. We can see right here that price swept this level of equal lows. It also swept this dynamic trendline liquidity over here. And we can tell smart money or some sort of heavy entity is getting involved in the market because look at the increase in volume as that liquidity sweep occurred. The liquidity sweep occurred right here, and that is in line with the exact time that the volume picked up in the market. So that is a very, very good sign for us because it tells us that our smart money techniques are adding up and, you know, coming together to tell us that smart money is getting involved with this particular trade. So we have that liquidity sweep. Let me just do that. And let me just mark that liquidity sweep. And we'll add that to the list. Next thing we look out for is our Fibonacci. So let's get in our trading range. Let's just play a bit more price to see. Yep, that is where the new high is formed. So we come to this low and we bring it all the way up to this high. First important thing is that we can see price is below this 0.5 level. The 0.5 level is here, and all of this all of the golden zones and whatever, and our demand zone is below the 0.5 mark. So that is the most significant part, right? And yep, so we now know that this trade is part of our fib / trading range. Perfect. Now, next thing we can look out for is I'll just move this out of the way because it tends to get a bit messy. But you guys can see we line up with the 0.85 and we are below the 0.5 mark. Next thing we look out for is our inducement. As we can see right here, we have a double low and a demand zone right above our actual demand zone. So this level is going to act as the inducement for this trade. So potentially early buyers will be stepping into the market at this demand zone. Price is going to do what? It's going to step them out, take up this level below this low, tap into our demand zone, and then fly up from there. Also, we can mark up inducement, our liquidity to be grabbed. You can see here we also have that double low, the same place as where the inducement is. This is probably going to happen quite often to you guys when you're trading. Your inducement and your liquidity to be grabbed will be at the same level. We also have this little support and resistance level over here, which you guys can see. Wick, 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 you know, wick, 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 and wick. So we have a lot of wicks at this level. This is another area of liquidity, which I will mark up for you guys. Again, this is all part of the SM2 zone. We are combining all of the SMC techniques to make this perfect zone. And this is literally as good as it gets, guys. Now we're just going to look at some extra things in the market to help this trade even more. So another thing I have just noticed is that this is the Asia high over here. So this is going to be the target for this particular trade. And yeah, other than that, there is really nothing else that you can look out for. Other than, you know, some other techniques like the power of 3 and some ICT techniques. But for now, this is all strictly SMC and we have found the perfect setup. So you guys can see we have this demand zone over here. We put the TP over here. It's actually a 1-to-8 risk to reward trade. Everything looks good. So let's get this trade live. And boom, just like that, TP hit. you can see the power of this strategy when price comes in with such, a lot of volume, sweeps out these traders, and reverses so abruptly in the opposite direction. In my opinion, this is very clear evidence that SMC is smart money is getting involved with this trade, and it is a clear sign of how this is a high probability setup. Scenarios like this play out time and time again in the markets, here and here. So make sure you guys learn this setup and you start using it on a day-to-day basis, and share your results with me when I know you will be winning. But yeah, guys, thank you all very much for watching today's video. I hope you all took something beneficial out of it. If you want to learn more about the way that I trade, the ALQ strategy, and all of the goodness behind that, how we were managing to get over 20% this month, how the students are getting results day in, day out, make sure to check out the mentorship, the first link in the description. Very good value for money. 20% off currently. Discount will be ending soon. I'm pretty sure I'm going to be ending this at the end of October, so make sure you use it while it's still there. If you want to get involved with some of the best prop firms in the market, then make sure you check out axtraderfirm.com and use code SM2 for 35% off. This will also be in the description. But yeah, guys, thank you all very much for watching, and I will see you in the next one.